Hello, Canada. Welcome to a deep dive into the new tax numbers for 2025, recently announced by Canada Revenue Agency. Today, we will unpack what these updates mean for your wallet, whether it is income tax, CPP contributions, or other key challenges. Stick around to learn how to plan ahead and maximize your benefits. Let's start with inflation adjustment factor. Every year, most tax and benefit announcements are indexed to inflation. For 2025, the inflation rate is set at 2.7%, down from last year's 4.7%. What does this mean? From January 1st, 2025, tax bracket thresholds and non refundable credit amounts will adjust. However, benefits like GST, HST credit, and Canada Child Benefit will change starting from July 1st, 2025, as they align with the program year. Now, let's look at the federal tax brackets for 2025, which have been indexed by 2.7%. First one, 15%. 15 percentage tax bracket is for 0 to 57,375 income threshold. 20.5 percentage is for 57,375 to 114,750. Whereas 26 percentage is for the bracket 114,750 to 177,882. Now, 29 percentage tax bracket is for 177,822 to 253,414. Finally, anything above 253,414 is 33 percentage. Remember, each province has its own tax brackets, so check your provincial rates as well. Now, basic personal amount. BPA increases over the years. The basic personal amount or BPA is the income that you can earn before paying federal tax. For 2025, the BPA will increase to 16,129, saving taxpayers up to 2,419 in federal taxes. However, high income earners will see a phased reduction in BPA once their income exceeds 177,882 and it fully phased out to 253,414. For those individuals, the BPA reverts to 14,538. Next, talk about Canada Pension Plan contributions. The contribution rate remains at 5.95% for employers and employees, but the year's maximum pensionable earning increases to 71,300. The maximum contribution will be $4,034.10 each for employees and employers. For the self-employed, the contribution rate remains at 11.9 with a maximum of 8,068.20. There is also the year's additional maximum pensionable earning, which introduces second earning ceilings for those earning above 71,300. For 2025, this ceiling will increase to 81,200 with a 4% contribution rate. Now, employment insurance or EA premiums. Employment insurance premium are rising slightly. For employees, 1.6% of earnings with a maximum contribution of 1077.48 is the limit. For Quebec residents, 1.31% with a maximum contribution of 860.67 is the limit. The maximum insurable earnings has also increased to 65,700. Now let's move to the saving tools, TFSA and RRSP limits. The tax-free savings account or TFSA limit for 2025 remains at 7,000. The cumulative TFSA contribution rule since its inception in 2009 is now 103,500. For the Registered Retirement Savings Plan or RRSP, the contribution limit rises to 32,490 based on 18% of your 2024 income. Now, Old Age Security or OAS. If you are receiving Old Age Security, the repayment threshold for 2025 is set at 93,454. If your net income exceeds this, your OAS payments will be gradually clawed back. Finally, the prescribed interest rate for the first quarter of 2025 will drop 4%. This rate applies to taxable benefit, shareholders' loan, and related party transactions. If you are expecting a tax refund, CRA will pay you 6% interest starting January 1st, 2025. Now let's look at a close look on TFSA, RRSP, OAS, CPP, and EA. Tax-free savings account or TFSA. The purpose is savings account that allows your investments to grow tax-free. Key features are contributions are made after tax income, meaning they are not tax deductible. Interest earnings within the account are not taxed. That means interest, dividend, and capital gain are not taxed. Withdrawals are tax free, and withdrawn amount are added back to your contribution room in the following year. Contribution limit are set by Canada Revenue Agency. For 2025, it is 7,000. Now, Registered Retirement Savings Plan. The purpose of RRSP is a retirement savings account with tax deferred growth. Key features: contributions are tax deductible, which means reducing your taxable income for the year. Next, investment earnings grow tax free until withdrawal. Withdrawals are taxed as income in the year they are made. Now the contribution limit is 80% of your previous year's earned income up to the annual maximum limit of 32,490 for 2025. Now let's see what is Old Age Security or OAS. The purpose of OAS is a monthly government pension for seniors aged 65 and older. The key features are it is funded by general tax revenue and it is not tied to employment history. Eligibility is based on residency in Canada and benefits can be clawed back, that means reduced back if your income exceeds a certain threshold, that is 93,454 for 2025. Now, Canada Pension Plan or CPP. It is a contributory pension plan that provides retirement, disability, and survivor benefits. The key features are it is funded through contributions from workers and employers. And contributions are based on your earnings up to an annual maximum limit of 71,300 in 2025. Retirement benefits depend upon your contributional history. Now, employment insurance or EA. The purpose is a government program that provides temporary income to support unemployed workers for those who are unable to work, like due to illness, pregnancy, or caregiving. The key features are it is funded through employer and employee premiums. Maximum insurable earnings are set annually 65,700 for 2025. Benefits are taxable and is calculated as a percentage of your average insurable earnings. Each of these programs or accounts play a role in Canadians' financial security, from savings for the future to providing income support during retirement or period of unemployment. Now, what is maximum insurable earnings or MIE? The definition of the maximum annual income on which employment insurance premium are calculated. Purpose is ensure a cap on the income level subject to EI contributions. Now, any income earned above MIA is not subject to EI premiums. For 2025, the MIA is 65,700, meaning only earnings up to this amount will be used to calculate EA contributions and benefits. Now, what is year's additional maximum pensionable earning or YAMPE? It is an additional layer of earnings used to calculate Enhanced Canada Pension Plan contributions under the CPP Enhancement Program. The purpose is it is introduced as part of CPP reform to increase retirement benefits by allowing contributions on earnings beyond the year's maximum pensionable earnings. It applies to earnings above the YMPE and up to higher threshold. For those who are earning a lower contribution rate is applied to CPP. For 2025, YMPE is 71,300 and YAMPE is 82,700. Contributions between YMPE and YAMPE are part of the enhanced CPP tier. The key differences are MIE relate to EI contributions and benefits, while YAMPE is specified to enhanced CPP contributions. So, that's wrap up our overview of CRA's tax changes for 2025. Stay informed and plan your finances wisely to take full advantage of these updates. Don't forget to like, subscribe, and hit the notification bell for more financial tips and updates. Have questions? Drop them in the comments below. See you next time.